Hello again and welcome back to London. There's only one certainty about the UK general election, and that is the outcome is extremely uncertain. So how should you be trading the sterling? Well, I've been speaking to Jeremy Stretch from CIBC. Jeremy, it's good to speak to you about the UK election. There's so many different permutations, and in a way I want to steer away from the political side as much as possible and start by talking about the pound. I'm struggling to see an outcome for this election which is positive for the pound if we don't get an overall majority for one of the parties. Is there any sort of permutations which is pound positive?
I think there actually probably is, and I think the most likely sweet spot as far as the currency is concerned is most likely a continuation of something similar to the coalition scenario that we saw between 2010 and 2015. If we see the Conservatives returned as the largest party but with support from the Liberal Democrats, that's probably the best case scenario as far as sterling is concerned. I think then you can look through some of those worst case scenarios in terms of an immediate move towards that EU referendum, and as a consequence I think we can then come back to focus on the underlying fundamentals, which actually remain reasonably supportive. Yeah,
what about that EU referendum? Because it seems a very big deal. We normally talk about Conservatives being positive for the economy, positive for business, but that is such a big question mark if they do hold an EU referendum.
Yes, and I think that's true, and I think that probably is the elephant in the room as far as a Conservative-led administration actually occurs, and I guess that's the real sort of potential negotiating point as far as any coalition deal or any supporting arrangements between parties alongside the Conservatives. Of course, if we are going to have that referendum upcoming sometime before 2017, then that potentially could be very destabilising, particularly in terms of business investment, at a time when the current account deficit is running at fairly alarming levels, something in the region of 5.5% of GDP. So clearly international investors are going to be wary of such a scenario, and that would be the potential sticking point of even this best case scenario of a relative maintenance of the status quo.
Do you think that referendum happens though? Because we're not going to get a Conservative majority. The Lib Dems are already talking about their red lines and they don't want to see an EU referendum. Do you think the Tories can actually push this through? Because potentially it's quite smart. They can say, oh, we tried guys, but we couldn't get it through. We just have to live with it.
Well, of course, that's one of the legacies of coalition government, because of course you go into it with a manifesto which you've been campaigning on during the election process, but of course you can never guarantee that all of those election promises will be potentially enacted upon. And of course you can then blame it on the legacy of the relationship with your coalition partners. So I think that's true, and I think of course the EU referendum, if it were to happen, is supposedly to come after renegotiation of various treaty responsibilities, and of course that also is a very debatable point. So I think there are a number of caveats which would suggest that the certainty or likelihood of that EU referendum is certainly well below the sort of parameters of likely assumptions.
Yeah, this is probably the reason why we don't see an outright leader, but do you see any real difference between the two main political parties? Ed Miliband's already saying today again that they're not going to borrow more than the Conservatives. They've both committed to billions in terms of austerity measures. So is there any real difference in terms of the overall economic picture, depending on who gets into power?
Well, of course, independent forecasters such as the IFS would argue that the longer-term potential borrowing numbers for Labour are somewhat higher than the Conservatives, and I think ultimately what we can assume from the history of the last 5 years is that, of course, borrowing projections aren't almost likely to be hit, and so I think we can probably assume that any deficit targets are likely to be some way away from the underlying reality. So I think there are a number of caveats in that context. Clearly, I think from a market perspective, there may be some concerns about the business-friendly nature or not, as the case may be, of a left-of-centre administration. But I think the ultimate concern, of course, is this degree of political paralysis that could ensue after the poll results come in.
We've talked about the most positive outcome, but what is the most negative outcome for this election?
Well, of course, uncertainty and protracted periods of inertia, I think, is probably the worst case scenario. So, of course, if we were to end up with the two largest parties in terms of very similar numbers of votes within the 650-seat parliament, then, of course, you're really delving down into the mechanistic arithmetic of the various individual groupings, and you could well have a prolonged and protracted period of simultaneous negotiations between a number of parties trying to form an administration. And the first Queen's speech is due to be enacted on May the 27th. We could well find that that we're running towards that date without any workable administration in place. And if that's the case, then that's the sort of worst case scenario as far as markets are concerned.
So let's just finish off with the currency implication for the sterling. I was looking at a one-year chart and I was surprised how actually relatively bullish it's been over the last 3 months. If we come Friday and we get a Conservative led government, what do you think are going to be the implications for the sterling?
Well, if we do see some kind of continuation of the status quo, which is necessarily closest to the sweet spot from a macro fundamental perspective, then I think we could well see a sterling relief rally, and I think that would potentially take us back to the sort of 155, 156 threshold relatively quickly. We have seen short-term sterling volatility moving up into very elevated levels, back to extremes that we haven't seen in 5 years. If that uncertainty can be taken off the table with the election result on Friday, then I think that could encourage a reasonable sterling relief rally. And I think then that brings us back to thinking about the underlying macro fundamentals, and of course that MPC warning about the flat nature of the forward curve, which I think is a degree of market complacency in terms of the UK rate outlook.
Yeah, so I said that was the last question, but this is the last question. That's interesting. You brought up the MPC. Do you think this has any implications for the Bank of England in terms of their monetary policy? It seems like most people are now looking towards the beginning of next year for a rate hike.
That's true, but I think markets perhaps might be a little bit too complacent in terms of the UK rate story. Now, yes, we've seen a slightly slower trajectory of growth to start the year, but I think the underlying dynamics in the UK, politics accepted, are still relatively supportive. And I think that does suggest that we do see rate expectations being brought forward again, maybe towards the latter stages of Q4, and I think that has some implications. And also, of course, if we were to see a left of centre administration and the prospect of maybe a looser fiscal stance, then perhaps that might at the margin just make people a little bit mindful of a slightly tighter monetary alternative.
Well, thank you to Jeremy for his take on events. These insights are always much appreciated. Stay tuned to Dukescopy TV for more interviews and analysis of that market-shaking event. But from London, goodbye for now.